Hello and welcome to the closing beat, everybody. Happy Tuesday to you. How's it going out there? Everybody's having a good day? A little early. Apologize for that. Eric wanted to catch up, do some stuff after this, and said, well, you know what? That sounds like a good idea. Let's do that. So we're doing the show a little bit early. Welcome. We are financial advisors here at Jazz Wealth, official sponsors of Drum Corps International this year. And so we'll be at about 12 different shows. Which show will we see you at? We'll have a calendar coming out soon because I know a lot of you are also fans, participants, and all of that. So love to see you. Say hi and be a part of our shenanigans as we go out to the shows. We do a wine and wealth class every Thursday. We've covered May financial focus, the sell in May and go away data. What is all that about? Apparently nothing at this point. Eric did a full review for new clients. If you just joined us here at Jazz, you can see how everything works, what you're going to go through, and how we're going to help you get your dough straight. And then last week we did how to build wealth, which is somehow still processing. It hasn't loaded yet, but it will be up there in archive for you. You're here to talk about the markets, though, so let's do that. I'm going to go over here. We'll try something different today. Here's the S&P 500. Yeah, we're just kind of playing with some different layouts. Anyways, if you look at the S&P, kind of an average day again, right? You got a quarter point rally. We know that the average gain in the SPY anyways is about 0.7%. The average gain in the S&P for an average day since inception is 0.09%. So just a little bit better than average, not really anything to get excited about. Not much, really nothing in the way of economic news to talk about here today. So we'll bounce around a little bit, give you some lessons, try some different things. If you look at the tech sector, you have tech and communication services, those both hitting new highs. That one's a little bit off for some reason, doesn't quite look right. If you look on the downside and you're interested in that sort of thing, real estate and energy, that's right. Real estate and energy are the furthest from their 52-week highs, about by 4% there. So if you like the lagging areas, you're looking there. If you like the leading areas, you're looking at tech. I will caution, here's your first lesson of the day. Are you ready? Tech has an interesting life about it, right? So tech is now about 30% above its 2021 highs. You got to go all the way back to here, right? So if I draw a line just basically from here to here, you're looking at about 30% there above those highs. Remember, tech is more volatile, though. It had a 30% decline, right? So you got to be able to handle that sort of thing if you're going to play along. But we said, okay, well, is that odd? Like, what's going on there? So if you take a look, tech is now officially it's 29% even after today. It's almost 30% of the S&P's total cap, right? That's the fancy way of saying it. 30% of the market cap of the S&P is technology, the tech sector. That's important because, remember, the S&P is moving based on those who have the largest say. Tech has the largest say. And so we look at this and all right, we're here. Historically, how does tech perform when it's here or higher, right? So really, we're just kind of looking at this area right in here, okay? When tech reaches these levels, the average forward return for the tech sector is a loss of 7%. In other words, when we get to being this much impact on the S&P, it tends to cool off a little bit. Not a lot. You've had obviously that 30% pullback there. We've had others, but the average decline is 7%, to the downside, right? And in fact, this is the only area where the 1 year forward returns are negative. If I were to take this box right here and just shift it down to here or even down in here somewhere, you wouldn't have negative forward returns 1 year later. They're all positive. So when we look at something like that, you go, okay, do I want to be a buyer of tech right now? Maybe selectively. But as a sector, you're kind of asking for this overbought condition and you're sort of chasing at this point. So be careful there. If we move around to the rest of the markets here, you look at the Dow just still flirting right around that 40,000 number. It did hit it. It closed above it. Now it's back below it. It's, what it is. You got the NASDAQ up here at highs where we're all waiting on NVIDIA for their earnings. I'm not sure that that's out yet. So looking through that, that's fine. The Russell 2000, a little bit weak today. Anything in the Russell 2000 just kind of had an off day. Whether it was the value stocks, the growth stocks, or the index as a whole, just kind of had a bit of an off day there, as did the price of oil. So oil, looking at crude oil here, we know we had that little uptrend there. It was short-lived. We now find ourselves back in this choppy range. You get the news out that I think Biden is going to what did he say, 1 million barrels of gas right around the 4th of July, right? Try to ease some of the gas prices there. Yeah, all right, cool, we'll take it. But so that's where you get a little weakness in the price of oil, not to mention what happened in Iran and the questions that are wrapped around that. Gold still extended here in the short term. I'm going to zoom in so that's not so crazy for you. Still extended in the short term. Remember, gold goes in fits and starts, and we talked about gold beating the market yesterday. If you're curious how often that happens, it's something you could take a look at. And then lastly, good news here for you. Well, I don't know. It's a little bit of good news, I guess. Yields moving a little bit lower, trying something different today. We're actually showing the 30-year yield and not showing price. So usually I show price, which would be inverted from the yield, if that's what you're looking at. All right. Before we get to stocks in the news, are you excited about the AI stuff going on out there? It occurs to me that everybody thinks NVIDIA, AI equals NVIDIA. Well, okay, sure, it's a dominant force in the space there, but there are tons of other names you can look at. So what we're going to do here is we're going to start breaking it down into categories. We're going to start real simple here, and we'll break down all of the AI stocks and their correlation to NVIDIA, I guess in this case, to see if it's something that you want to do more research on. Remember, don't just pick what everybody else is picking. Look around. There's lots of supporting cast members out there that you may be interested in. So at the very top, what we have is we're going to do all the infrastructure of AI. We'll do 2 today, and we'll just keep going with it. You have the cloud providers. These are names you've heard of before, right? I gave you the definition. They train, run, maintain AI models through their computing and data storage solutions. That is how they would like to say it. It's very fancy there. You have Microsoft, Alphabet, or Google, Oracle, and Amazon. They are 50% correlated to NVIDIA. In other words, it's going to, if NVIDIA has a blast off singular day, let's call it earnings, right? Well, we're going to end up seeing. If they do that, you expect to see about a 50% equal move in these stocks. They are that closely correlated there, right? So something to keep in mind. Now, you've heard of those. That's the easy one. That's the very top. Big names, no problem. You could do your research, see if it's something you like. What if we go a little bit further? We're going to go off the path here just a little bit, go into the design side of things here. Have you heard of ARM Holdings, Synopsys, Cadence Designs, right? Some different names that you've probably seen their ticker symbol move up and down a little bit here and there. But what do? This is more in the intellectual property side of things, right? A lot of licensing going on, right? These guys they do make stuff. It's like they don't necessarily get out there and physically create the chips. They don't physically create the circuit boards, right? Or the whole setup for it. They're using their software, which is largely AI driven there. So you got something like ARM Holdings here. These guys license out their intellectual property, right? For companies that want to make processors. They want to make these circuit boards, things like that. Very heavily AI focused. And if you look back at their last earnings there, well, you know that a lot of their money is going to come from royalties, right? They're just like the Shark Tank stuff. Let's license it out and sit back and collect a check. Not quite like that with these guys, but you get what I'm saying there. Their licensing revenue up 60% year over year. Where do you think that's coming from? Yeah, it's all AI, right? It's the whole world. That's what they're focused on there. Synopsys, they design software that helps companies make the physical circuit boards, largely AI driven there. And so that's going to be in that category as well. This is in the design phase. This is not NVIDIA out there with the latest and greatest chip, right? These are the supporting cast members there. And Cadence I think is one of the cooler ones, actually. They have a bunch of different things that they offer there, but it's an AI-driven software that helps other companies achieve whatever it is they're trying to do. So for example, Honda wants to create an electric vehicle. They use their fluid dynamics software from Cadence, and it helps them design the shape of the car, right? Whereas a human used to have to take the car, put it in a tunnel, and watch the smoke go over and go, measure some stuff, and then go start from scratch, right? Well, this is all AI driven. So they used it to help drive their electric vehicle design. So it's AI, but it's not AI in the traditional sense that you're used to hearing about it on TV. All right, so the reason why we point this out, you may know, AI is obviously the talk of the town, right? The talk of the street, as they would say. 41% of all companies that reported earnings on their this last quarter one earnings report, 41% of them mentioned AI inside of their calls. All right, so, well, that's pretty cool. That's a new high, obviously. Let's do something cooler. Let's break it down by sector and see if there's any change there. There's actually a pretty cool way to look at this. So here's every single sector in the S&P. Then we break down the number of AI mentions in their conference calls by stock in the sector. All right, you get what I'm doing here? Check this out. Look at the energy sector. That is the biggest increase quarter over quarter of mentions in AI. So energy's trying to get in the game. They realize, or they have been realizing, the opportunity to lower cost, improve productivity, right? Get things done. So energy really stands out, and there's a bunch of names, if you want to look through it, that are actually getting into the phase where it's generating a return, right? So it's one thing for maybe me to say, I'm going to use AI to generate the stuff at the bottom of the screen that you see. All right, that was sort of productive, but did we make anything from it? No. Okay, I'm going to use AI to go get me new clients, right? And that will generate some return for the company. That's what I mean. So a lot of the companies in the energy space now are using AI in that second phase, right? It's one thing, you talk about it, improve productivity, maybe fire some people, right? We don't need you because AI does it. I don't make the rules. So that's the first phase. Second phase is let's get a return on our investment. Not just saving money, but let's actually make money from this. That's the energy sector if you want to take a look at that. And then I would notable mention here, I'd point out the materials sector, a little bit more difficult for them. The obvious ones are tech and communication services. You kind of can picture that. Maybe even companies in the discretionary space or consumer staples where it's more retail driven, widgets are going in and out, we're tracking inventory, the basic stuff there for AI. You get the gist of what I'm saying there. So a different way to talk about it. Just thought we'd go over some different ways of looking at AI, and we will continue to do that because I worry, I see the emails, I worry that you guys are just sort of jumping all in NVIDIA and you're not interested or curious about what else is out there. That's a shame. All right, so let's take a look at some of the stocks in the news as of now anyways. So Zoom, we didn't get a chance to cover this one here yesterday. Better than expected earnings. Sales beat by 1%. Earnings beat by 14%, somewhere in there. Free cash flow, interesting for them, about $500 million. All right. I don't know if you track that, right? But that's high for them. The trouble, if you're going to find any trouble with Zoom, they make their money from what they call large revenue clients. Not me and you paying a little bit of money to just chat with other people that you work with. Large revenue clients. That fell. That was off by about 15% there. But like others, you know, they mentioned AI in their conference call. That was actually a big focus for them. Lam Research, LRCX is the ticker symbol. You're going to notice this getting a little bit weird here soon. They're doing a 10-for-1 stock split. So in other words, it's $963. Now, if today were the day, you would just divide that by 10. You'd find yourself with a $96.30 stock. You would have 10x less the shares, right? Or 10 times more the shares, but it would be at 10 times less the price. That's how that works. The stock, what else did they say? No. Oh, they're doing a $10 billion buyback as well once all of that is completed. So if you're curious about that. Lowe's got a little attention here today, reported earnings. Sales down 4.1%. If you're a client, I'm going to send you to the notes from Jazz over the weekend because we broke down Home Depot as part of our example to show that, yeah, less people are buying stuff, right? We're not fixing our houses anymore. That DIY side of the business is weak, and Lowe's just basically confirmed that. The trouble with Lowe's here, you can have lower sales if your margins can increase, right? If you can adjust. Well, this is kind of the forward side of them seeing lower sales, so their margins are coming down as well, and that's largely why you saw what you saw today in the stock price. Macy's here, beat on earnings by 50%, 50%. They said the same thing. Sales are slowing and have been slowing, aside from their first 50 stores. It's kind of their bread and butter, if you break down what they're doing here. So what is that? Like the 13th dozen retail company that said weaker sales, we need to lower some prices, we need to be more we need to incentivize people to get in here and actually buy some stuff. Macy's is not immune to that either. Just a bunch of Fed members speaking today. I mean, there was so much to keep track of there. I was going to do something where we tried to organize the key talking points, but alas, did not get to it. You got NVIDIA probably out here with earnings while we're talking. I'll take your questions if you have any and you're watching. But I'm sorry. No, NVIDIA is tomorrow, not today. That was my bad. Otherwise, you got tomorrow over in China. Pinduoduo is coming out there. Target, TJ Maxx, retailers. Williams-Sonoma, right? It's the retail season of earnings here. NVIDIA, of course, and a name we just talked about, Synopsys, right? They're going to report earnings. So if you get a little bit of an overview of what they do, now when you see their earnings, you'll know like, okay, what do these numbers mean? Kind of cool, right? Different way to do it. Okay, let's see what we got here. I'll take your questions if you have any. I realize we're early. You know what I mean? We'll deal with it. It'll all be good. We're all saying hi to Matt. Hey, man. What's going on, man? How you doing? Yeah. Maybe need to revisit those strategic oil reserve levels again. I saw that. My data won't update until Wednesday, right? I think it'll be it'll be Thursday next week because Monday's a holiday when the next numbers come out. Can't spell NVIDIA without AI. Doc, I think we make like 16 cents doing this show. So, hey, maybe it's helpful. Maybe we could use AI to make 18 cents. I don't know, Early start because Eric needed something. He needed someone to talk to today. Yeah. What people don't understand is they already own NVIDIA. So I go through that a lot. Doc's saying, hey, if you own the index, you're in NVIDIA. I go through that a lot because a lot of people start overlapping investments in their various accounts. And that's a big mistake because we're trying to grow all of your dollars. So just being in an index fund across the board is fine. But if we can unoverlap some of those investments, you can improve the performance there by doing that. You're pinning on Uber here down. That's right. Yeah, I missed Uber. Okay. Yikes. All right. So what you have now is a declining stock, clear downtrend, that's going to gap down significantly. You're going to catch the day traders first thing in the morning on that one. But going forward, I'd have to look at it. I haven't looked into what happened with them, but still expecting a 10% dip. What are the probabilities after a 5%? Oh, what are the probabilities of a 5% pullback turning into a 10% pullback? I like the way you're thinking if that's what you're asking. I don't know the answer, but that's definitely something we can do. Yeah. Huh. All right. Thoughts on metals taking off. The Albemarle will go next, especially with all the EV around the world. Well, aside from today, or what I should say is after hours there, aside from today, over the news you got in China about their EVs just going crazy, it's a slowing thing, isn't it? You notice that? And this is normal, right? So the retailers saying that they're seeing slower sales. Well, yeah, they're seeing slower sales compared to the coming out of COVID era, compared to last year. Oh my God, we're buying stuff like crazy. So you see sales really normalizing, not really getting weaker. That's why I'm not on here every day going, oh, the economy is slowing down. Yeah, it is slowing down, but I'm not like doom and gloom because really a lot of the sales numbers from retailers and some of the materials and manufacturers, they're just reverting back to normal. So I'm not too panicky on that just yet. Where we go from there, interesting. 46% on tax on your capital gains, and the rumblings of taxing unrealized capital gains. Come on, man, we can't be doing things like that. I don't like that one. Tom's asking the best pickup line to get a woman. Cody, what do you got, man? Tell me your best pickup line to pick up a woman. Kevin's probably got a good one.
Best pickup line.
Yeah. Kevin, do you just roll your R's when you talk to women? And that's what does it. Sometimes he knows. So if you don't know, Kevin's kind of our resident gigolo around here.
Well, that's the word.
Kevin's got the women just coming and going. So you might want to ask Kevin. I'm not going to be the best one, I'll start talking about money or something, That
works.
Any pickup lines, anybody?
Do you believe in love at first squat, or should I do another set?
Okay, so that's a natural one for Cody. Use that one, Tom. Do you believe in love at first squat, or should I do another set? There's one where it's like, or should I come in again? You know, you believe in love at first sight, or should I come back in, or something? You know, it's something like that.
Play on that one.
Pickup line. Tom, just be yourself, man. Just get out there and just point. You. I like what I see. Come here. Come here. What's your name?
24.
All right. Deeper voice. What's your name? Beautiful name. That's it. You know, it's confidence. Do you still post your funds performance on a website? Publicly, no. We actually a little bit of trouble for doing that there. You're not really allowed to do that. Of course, clients can see forwards, backwards, all that stuff, and until we can find a way around that. That is true. Is this statement true? If prices are driven by inflation, profit margins should remain the same. Inflation, oh, that's too simplified. No, I can't say just that is true. I would not. Yep. Williams Sonoma, heck of a ride, and with the earnings coming up, could be even better there. Doc, that's not bad, man. Do we ask for numbers these days? I don't think kids do that. I don't know how old Tom is. I love the one. There's one where they go, it's an old like senior citizen thing, and these two women got to be in their 70s, are just standing there having their coffee or whatever, and this old guy walks up and it says, "How to holler at your girls," and the old guy walks up, puts his hand on the wall, and goes, "Ah!" I thought that was so funny. It's cute. I love old people. All right, gonna wrap it up there. We will be back, do this all over again. Did you learn something about the AI stuff, right? I'm not trying to just come here and talk about the markets every day. If I can teach you something, that's awesome. If I can teach you something beforehand and it helps you in some way, that's awesome as well. Keeps us in mind there. You remember the shirt, the funny words, the things we say, and we'll be back to do it all over again tomorrow. See what else we can have. Okay? Adios. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.